We'll start then. I hope that everyone got the slides that I have already circulated. So we are going to start a new topic under this program, Certificate in Branch Operation and Management. So we are going to study some law part today onwards, another 20 hours that I have to cover. Some topics, actually 5 topics that I have to cover. The first topic that we are going to study today is the banker customer relationship. When I inquire from the institution, I heard that we have 17 students, and majority of you are bank staff, and I heard a few university students also there. So basically, a majority of you have a banking experience. So others, don't worry. The law is a different subject. Even though I said the bankers that who have joined here, they have experience in banking. I know they are not much. I would say uh, conversant with banking law. So that's forget about that part. So we'll start the lesson. The banker customer relationship. We are going to study the legal background of banker customer relationship. That is the idea. So to understand this, the banker customer relationship or law related to banker customer relationship, I have divided the main topic into several subtopics. This is to understand this concept or the law easily. So you can say I have given here 8 subtopics. Those are the topics that we are going to cover. The first one is who is a banker or what is a bank. So we are going to, under this topic, we are going to discuss the legal definition or legal recognition for the bank. So can anyone claim that he or that institution is a bank? Whether the law will accept any institution as a bank just because they have the name bank, they have the word bank in their name, or what are the requirements to become a bank or be a bank? So these are the topics, the things that we are going to discuss under the first subtopic. Then after identify the bank, a legal requirement to be a bank, then we are going to discuss the second one, what is banking business. So you know the banks, they are doing banking business. So then what is banking business? What is the difference between other businesses and the banking business? What is the legal definition for the banking business? How law apply to the banking business? So those things that we are going to discuss under the second topic, what is banking or banking business. Then that is from the bank side. Then we shift to the other side, customer of a bank. Who is a customer? Who can be considered as a customer of a bank? What is the legal definition for the customer? So what is the law applicable to the customers of the bank? So that part we are going to cover under that topic number 3, who is a customer. Then next one, now we know when we say banker customer relationship, we are going to discuss about a relationship. So who are the parties of the relationship? Bank and the customer. So what is this relationship between the bank and the customer? So that we are going to discuss under topic subtopic number 4, the relationship between banker and the customer. Then after we identify the nature of the banker customer relationship or legal background of the relationship, then we are going to discuss under the banker customer relationship, what are the rights and duties of the banker. From one side we have bank, so what are the rights and duties, legal rights and duties of the bank. Then after that we are going to discuss what are the legal rights and duties under this banker customer relationship of customers. So that is number 6. So then thereafter we are going to discuss about the different types of relationship between bank and the customer. That is under classification of banker customer relationship. So there are, you may understand when we discuss this, between the banker customer there can be several types, so several different types of relationship. So that we are going to cover under this topic number 7, classification of banker customer relationship. Then at last we are going to discuss termination of banker customer relationship. How to terminate banker customer relationship, what is the law applicable, what happened when the banker customer relationship cease or terminated. So that part we are going to discuss under topic subtopic number 8. So there is another thing that I want to tell you at the beginning. If you don't understand any point that I discuss, or any question that you have to ask from the relevant slide, that you can unmute your microphone and question then and there. Because since it is a new subject to you, I don't think that without understanding the points, legal points then and there, it is no point that we move forward. So everyone, if you have any questions with relevant to that the slide or topic, you can then and there ask the question. So I welcome that. So therefore, don't be silent. If you don't understand, please raise your voice. You ask the question. Right. So then we'll go to the topic number 1, subtopic number 1. So we are going to discuss who is a banker, what is bank under the legal definition. Right. So you can see this slide here. We are going to discuss what is a banker, who is a bank. Now, before we study the law related to the banking or banking industry, so we should understand the banking industry, history of the banking industry a little bit. As you are aware, the banking industry has been introduced to the country Sri Lanka by British people during their colonial period. You know, the Dutch people, they ruled the country for a period, and thereafter Portuguese, they ruled the country for a period. Then at last, the British people, they ruled the country for 150 or more than 150 years. During this period, British people, British rulers, they introduced agriculture or plantation industry to the country. With the plantation industry, you know that international trade was developed. That area was developed because the crops or agricultural products, they imported, export to the European countries. So therefore, the Sri Lanka or Ceylon at that time was engaged in international trade in a larger scale. As you are aware, when it comes to international trade, the banking is one of the paramount important service which serve to the international trade. So, you need LCs, bank guarantees. All these are involved with international trade, especially shipping. When you ship goods, those facilities or services of banking services are needed. So then what happened? With the international trade, the British people, they introduced banking system into the country. We never had a banking system before that. So there are, I mean, different ideas about the first bank of in Sri Lanka. Some says the first bank in Sri Lanka was a bank called Hatton Bank. It's not Hatton National Bank. A bank called Hatton Bank. So some says there was a bank called Candy Bank that was the first bank. Whatever it is, this banking industry was introduced to the Sri Lanka, introduced to Ceylon during British colonial period, late 19th century. So then what happened when we introduced the banking industry to the country? It is whole new thing to the country. We had a law system, we had a legal system, we had a legal structure, a judiciary structure. We have a Sinhalese law system. We had then Dutch people introduce the Roman Dutch law. However, any of these laws, Sinhalese laws or Pesavalami law, that is Tamil law, or even Roman Dutch law introduced by Dutch people, these laws never or didn't cater to the banking industry, because the banking industry, it was a new thing to the country. So what happened then? The British people introduced the banking law, English banking law, to the country to solve any dispute arise out of these banking transactions. So remember, the banking industry or banking matters are governed by English law, not under Roman Dutch law. When I say that, don't say that Roman Dutch law won't apply to any banking transaction. It is not the case. The majority of the banking transactions are governed by English law. Now, in certain areas, the other laws apply. You know, for example, if you take a guarantee, a personal guarantee, bankers know that when we lend money, we take securities or collaterals. We take personal guarantees. When we take personal guarantees, the personal guarantees are governed by Roman Dutch law, right? So that's why I told, even though the banking industry, the entire banking business is governed by English law, certain part of transactions are governed by different laws. So different laws apply. So Roman Dutch law, Candian law, Desavalami law. So those laws also apply to banking businesses or banking transactions. Then with the banking, with the introduction of the banking business to the country, as I told you, we had never had a law govern the banking business. Then the British people, they introduced several statutory laws to govern the banking business. You know, when we introduce the banking business, with the banking business, there are several services came. For example, the checks, bills of exchange. So those things came into the Sri Lankan system, the Ceylon at that time. So now with these things, to govern these checks or any instrument or any transaction, banking transaction, so we didn't have any statutory laws. So therefore, the British rulers, they introduced several statutory laws. One of those laws is that Bills of Exchange Ordinance. The Bills of Exchange Ordinance introduced to the country in 1927. Bills of Exchange Ordinance number 25 of 1927. So that is the first one, first statutory act, important statutory provisions or ordinance introduced to the country to govern banking transaction. So all bills of exchange, checks are governed by this ordinance. Ordinance number 25 of 1927, bills of exchange ordinance. Even today, the checks are the law applicable to checks is the bills of exchange ordinance. So therefore, you have to be familiar with bills of exchange ordinance. Right. Now, we are going to discuss, we are discussing who is a banker or what is a bank. So this, under this topic, so what is the, we are going to understand what is the legal definition to the bank. Who can be recognized as a bank under the law. So here, when we come to this bills of exchange ordinance, at that time, remember, we didn't have a banking act. The banking act came or introduced to the country in 1988. 1988. So very recently, the Act number 30 of 1988. So since we didn't have a banking act in this period, that is 1927, when there is an issue with regard to the interpretation of the bank or banking business, we had to rely on the bills of exchange ordinance. If bills of exchange ordinance doesn't provide any interpretation, then we had to rely on the law of England. Why? Because the banking industry was introduced by British and the banking industry was governed by English law. So then when we don't have any law or provision in the Sri Lankan law, we had to look into the provisions of British law. So that because we didn't have a banking act at that time. So to understand this, this case is very important. This is Commissioner of Inland Revenue versus Bank of Chettinad Limited. This was decided in 1947. What happened in this matter, you will understand when we discuss the facts of the case. In what happened in this matter, this during this period in 1947, Inland Revenue Department or the government of Ceylon announced that they are going to give a concession on income tax for the banks. So government said that we are giving a concession on income, the tax concession on income to the banks, only to the banks, not to the financial institution, not other companies, but for the banks. There was a company registered and operated in Sri Lanka at Ceylon at that time. The name of the company was Bank of Chettinad Limited. You can see their name carries the word bank. So Bank of Chettinad Limited. And their business was they lent money, they took securities or deposit from the public and they lent money and they charge interest. They took mortgages. So they basically, they did a business similar to the banking business. So you know that the bankers, we take deposit from the public and we lend money to the public and we charge interest. That is our income. So that is our one of the main business. So that's how we generate income. So when you see the business, if you see the business of this company, Bank of Chettinad Limited, their business also similar to the banking business. So then what happened? this company, they claim the tax concession. They made an application to the Inland Revenue Department and said that we are also entitled for the tax concession because we are a bank and we are doing a banking business. So consider us as a bank and give the tax concession. That was their application. However, that application was rejected by the Inland Revenue Department. The Inland Revenue Department said, though the word bank in your name, you are not a bank, you are just a finance company who is lending money. So therefore, we cannot consider you as a bank. So therefore, you are not entitled for the income tax concession. Now, there's a dispute. There's a dispute. Company says, I am a bank. I am doing banking business. So therefore, I am entitled to the tax concession. On the other hand, the commissioner, Inland Revenue Department says, you are not a bank. You are only a finance company. So you are not entitled for the tax concession. So then this company went to courts. They filed action against the Inland Revenue Department. So the argument is that we are doing a banking business. We are registered as Bank of Chettinad Limited. Our names also shows that we are a bank. So therefore, we have to be considered as a bank and we are entitled for the concession. Now, what is the question before the judge? A simple question is whether this Chettinad Company Limited is a bank or not. If judge decide this is a bank, then they are entitled for the tax concession. If not, they are not entitled. So the question the judge has to decide is, what is a bank? Who can be considered as a bank? Or what is the definition for the bank? So that is the question before the judge. So then what happened? There was no Banking Act at that time. So that is out then. The only the statutory the document available at that time was Bills of Exchange Ordinance. Bills of Exchange Ordinance. Then unfortunately, in the Bills of Exchange Ordinance, there's no definition given for the banking business. There's no definition for the banking business. So then what is the situation? If there is no definition, the judges, they have to look the decisions or the law applied in England. So when a matter like this arisen in England, how the English judges has decided this type of situation or case. What is the definition given in those cases, that is English cases, for the bank? So then the judges, they looked into the matter and they decided, just because that you have a name, you have the word bank in your name, that you cannot be considered as a bank. Right? That's number one. That is out. Then further the judges decide, even though that you are doing a similar business to the bankers, that is lending money, that you cannot be considered as a bank because lending money is not unique to the banks. So other financial institutions, finance companies also, they also lending money. So therefore it is not a unique business. So that is also out. Then how do you decide whether that person is a bank or not? What is a unique feature? So when the judges looked into the features of banking, they realized there's one thing is unique to the bank. That is only The banks are maintaining current accounts for their customers. No one else, no finance company, no individual, uh, no a partnership, no one can maintain current accounts in their business for their customers. So therefore, if you are not maintaining current accounts for your customers, even though your name carries the word bank, even though you are doing a business similar to the bank, you are not a bank. That was a decision of Chettinad case, or Commissioner of Inland Revenue versus Chettinad. So the case was decided against the Chettinad company, and it was decided they are not a bank because they are not maintaining current accounts for their customers. Now that was a decision given in 1947. Now think the definition or the judgment given in this case with today's scenario. Think about the banks that we have today. We have different types of banks. We have commercial banks. We have government banks. We have special banks. We have licensed commercial banks. We have development bank. Likewise, we have different types of banks. Now, some of those banks, they are not maintaining current accounts. They are not maintaining current accounts. Special banks, they don't maintain current accounts. Then, as per this definition, as per the definition of Bank of Chettinad, those banks then cannot be considered as a bank because they are not maintaining current accounts. So what I want to show you here, so Chettinad judgment is not valid for today. I'm repeating again, right? Don't say that Chettinad judgment is not valid. It was valid for that period. So after that, that is 1947. After that, 1947, the banking industry has changed, developed. Technology has developed. So the banking industry in 1947 and banking industry in 2021 is not similar. It's not same. So this judgment was valid for that period, and this judgment is not valid for today's context. However, this is very important judgment when it comes to banking industry and when it comes to the question, who is a customer? One of the very important judgment, Sri Lanka judgment for the question of who is a bank. Right. Any questions up to now? If you have, do you have any questions? Okay. Since you don't have any questions, then I'll go to the next one. Right. Interpretation for the bank, the word bank, as per the Bills of Exchange Ordinance. What is the interpretation given in the Bills of Exchange Ordinance for the word bank? According to the interpretation clause of the Bills of Exchange Ordinance, that is section 2, banker, this is the definition given in the Bills of Exchange Ordinance, banker includes a body of persons, whether incorporated or not, who carry on the banking business. This is the definition given in the Bills of Exchange Ordinance for the word bank or banker. Now there are 3 points, we'll take one by one. The first one says the banker includes a body of persons. When we say body of person, it can be an individual, it can be a partnership, it can be a company, Even it can be a society. So body of persons. Now think today's scenario, right? Will it valid for today? So, however, this is, you see now this act, the ordinance came into operation 1927. So a body of persons, whether incorporated or not, whether incorporated or not means whether they are registered as a company or not. So basically during this period, as per this definition, you see the individuals carried out banking business, partnerships, or a company, or even a society, they could carry banking business or banking business, or they can considered as a banker. Then the third point is who carries on the business of banking. The important point here is the banking business or the business of banking is not interpreted in the Bills of Exchange Ordinance. When we say that, when we say the banking business is mentioned but it is not interpreted, so anyone can claim that they are doing a banking business because it is not defined. Not defined. So as per this interpretation of Bills of Exchange Ordinance, what you have to understand is this interpretation has been given based on the banking industry at that time, and at that time any person, whether they are incorporated or not, they could do banking business. Since the banking business is not defined, they could do any business and claim that they were doing banking business. So therefore, when we looked into this definition, you see this definition, one thing, number one, is not valid for today. This definition in the Bills of Exchange Ordinance is not valid for today. So therefore, if you get a question at the exam to give an interpretation to the word bank or banker, don't write the interpretation of the Bills of Exchange Ordinance. You can write this, but this is to elaborate your answer, but this is not the correct definition applicable today. So, right? To understand the banking, who is a banker and how the law has developed, that this is important. Right. Number two, this definition is very broad definition. Number one, it is not applicable today, applicable for today. It's not valid for today. Number one, two is it is a broad definition. Broad definition means that it is very vague. So anyone can claim that they are a bank. So therefore, it is not a very good definition. Right. So that is Bills of Exchange Ordinance definition for the bank. So any questions, if you have, you can raise. Then we'll go to the next one. What is the definition given in the Banking Act for the word bank? So Banking Act came into operation in 1988, Act number 30 of 1988. So in this, now this is the act applicable to the banking industry today. Apart from other laws, English law is there, Roman Dutch law also there, right? So personal laws also apply to the banking business. The main statute or statutory law applicable to the banking industry in Sri Lanka is the Banking Act. Banking Act number 30 of 1988. Now in this act gives a clear definition for the word bank and banker and the banking business. That is number one that you have to remember. So we don't have to rely on the previous judgment now. We don't have to rely on the Bills of Exchange Ordinance. We don't have to rely on the judgments given in England. So we have an act. We have the Banking Act. Banking Act gives a clear definition. As for Section 2, Subsection 1 of the Act, only incorporated companies are allowed to do banking business. Now see, compare this with the previous definition. As per the bills of exchange ordinance, any person can do banking business. The definition of the Banking Act says only incorporated companies are allowed to do banking business. So no individual, no partnership, no societies can do banking business under this, under the Banking Act. So what is the first requirement to become a bank then? So you have to register your business, you have to register the institution or the organization as a company. So you have to incorporate a company. So the corporation of the corporation of companies or establishing of companies are governed by the Companies Act. So first thing, that the business has to register as a company under the Companies Act. That is number one. Then number two, after register the company or after establishing a company, incorporating a company, you can't do banking business unless you obtain a license. So number two, license to be obtained, a license to be obtained to carry out the banking business. From where do you get the license? From where you have to obtain the license? You have to obtain the license from the central bank. To carry the banking business, you have to obtain a license from the central bank. More correctly or more precisely, if I say the license is issued by the monetary board of the central bank. You are aware that the banking business and the banking institutions, banks are supervised and governed by the Central Bank of Sri Lanka. So the banks are regulated by Central Bank of Sri Lanka. So therefore, to become a bank or to do banking business, you have to obtain a license. You have to incorporate a company, then obtain a license. Other than the licensed commercial banks or licensed specialized bank, no one can use the word banker or bank or banking. So these words that you can't use in your company or in your business unless you obtain a license from the central bank. Now you remember, this is the definition given in the Banking Act. So it has to be a company. You have to register a company, then obtain a license from the central bank to do banking business. These are the requirements. There are other requirements: financial requirement, regulatory requirement. There are a lot of things to do, but when it comes to law, these are the main two law points or law requirements to become a bank. Now, apart from this, remember there are other government banks which are established under different laws, not under the Banking Act. Now, for example, if you take Bank of Ceylon, the Bank of Ceylon is established under the Bank of Ceylon Act. So establishment is under the separate act, but Banking Act applies to the Bank of Ceylon also. So they have to do banking business under the Banking Act, as per the Banking Act, as per the provisions of the Banking Act. Likewise, we have other banks, some other government banks, People's Bank, NSB. We have several government banks and development banks which are established under different acts passed by the Parliament. Other than that, if it is a private bank, a private commercial bank, then it has to establish under the provisions of Banking Act. You see any private bank, any private commercial bank, so these requirements are there. For example, we take HNB, Hatton National Bank. It's a company. Hatton National Bank is a private bank. It's a company. Hatton National Bank has been registered as a company under the Companies Act. That is number one. They have fulfilled that requirement, law requirement. Number two, they have obtained a license. After establishing the company, they have obtained a license to do banking business from the central bank. So the second legal requirement also there. So if these two requirements are there, then you are allowed to do banking business. Now you remember in certain situation that the central bank sometimes they recall the license or they cancel the license of banks. In a situation like that, they are not supposed to do or they are prohibited doing banking business. So that is the definition or the legal requirement to be a bank, to become a bank under the Banking Act number 30 of 1988. So any questions? If you have any questions up to now, you can ask that question. Have any questions? Okay, since no questions, then I will go to the next one. Okay, we'll see next one. Now we know who is a bank. Then what is banking business? What do you mean by banking business? Now remember, as per the Banking Act definition, you have to obtain a license to do banking business. When you obtain a license, you are allowed to do banking business. Then the next question comes to our mind. What is banking business? What do you mean by banking business? What are the activities or what types of commercial activities that we can do under the banking business? Can we do any type of business or any business, any commercial activity and say that it is a banking business? Are we permitted to do any type of business? Can we do? Can we lend money? Can we charge interest? Can we do leasing, hire purchase? Once we obtain a banking license. So then what is banking business? It is also defined in the Banking Act. Section 86 of the Banking Act says banking business is, when we say banking business, it has two parts. Number one, the banks, they receive funds. They receive funds from the banks, from public. That is one part of banking business. And the other part is use that funds to generate income. So there are two parts in the banking business. One, you take funds, you receive funds, right? Then you utilize that fund to generate income. Now we'll see under what conditions that we receive funds. So banking business says, banking business has been interpreted in section 86. Banks are allowed to receive funds from public, through the acceptance of money deposits. The banks can take money deposits from the public on a condition. What is the condition? Payable on demand. So when public demand, the customers demand, when the depositors demand, the bank has to repay that money with interest. So that is number one part, receiving funds from public. We receive funds from the public and we have to pay some interest for them to the depositors. To pay interest to the depositors, the bank has to generate money out of these funds. Otherwise, what will happen? The bank can't survive. So we'll say we take a deposit of 100,000 from a customer and we agree to pay 5% interest at the end of the year. 1 year fixed deposit. Now we have 100,000 in our custody. We have to pay 105,000 rupees at the end of the year with the interest. So how we are going to pay? How we are going to generate 5,000 out of this 100,000 rupees? That part is covered under the part number, and under this it says the banks can use the funds, the money of the depositors for various activities. What are those activities? For advances, the bank can give loans or lend money to the customers. You take money from the public and you give money to the public as loans. You get money from the public, deposits you take from the public, promise to pay 5% at the end of the year. You give that money to another customer, 100,000, and you charge 10% from the customer. So what will happen at the year end? You get 110,000 rupees from this customer and you pay 105,000 to this customer, depositor. So you have 5,000 profit. So that is our business. So as per this, the bank can utilize public funds or deposits for advances. You can lend. Also, the banks can utilize that money for investments. So bank can reinvest that money, that depositors' money in various places, and you can generate income. So that is also allowed. Actually, the banks, they are investing depositors' money, not the money of the shareholders, directors, or employees. The money in the bank is depositors' money. So bank actually use others' money to generate income. But you are allowed to do that under this definition, under the Banking Act. Then the number 3, the bank can utilize the funds of the depositors for any other operation either authorized by law or customary banking practices. So you can lend, you can invest. Apart from that, the bank can utilize the funds or the money of the depositors for any other operation, any other commercial transaction which is authorized by law. If it is a legal a transaction, if it is not an illegal transaction, bank can do any transaction and generate income. For example, banks, they can do leasing. They do a hire purchase business. They are into many other businesses. They have credit cards. Likewise, they have housing loans, various types of businesses. Bank guarantees, right? You name, we have 100 products or more than 100 products that we give to customers and we generate income. That is uncovered under this last part. If that activity is not illegal, that means if it is recognized under the law, or if the transaction is recognized under the banking practice. Example, overdraft transaction. We are lending money the customer. We allow the customer to issue checks without sufficient funds in the account. That is called overdraft. That is a banking practice which has been recognized under the law. For the overdraft facility, you know that we charge interest. We charge interest on interest also. That is also has been accepted in court of law. So therefore, this is the definition given for the banking business in the Banking Act. So you don't have to rely on any other definition. That definition is very clear. Under this, there are two parts of the business, banking business. Part number one is that you receive fund from the public. Part two, that you utilize that money or deposit to generate income. How can you use, or what are the activities that you are permitted to do is there to advance for investment or for any other transaction, uh, if it is permitted by law or if it is permitted by banking practices. This is the definition for the banking business. Okay, any questions? Do you have any questions? Any doubtful area that you have to clarify? You can ask. So seems to be you don't have any question. Then I'll go to the next one. Next one is we are going to discuss who is a customer of the bank. Now we discuss who is a bank, what is banking business, and next we are going to discuss who is a customer of the bank. Right. Section 82 and 83 of the Bills of Exchange Ordinance. Remember the Bills of Exchange Ordinance number 25 of 1927. Section 82 and 83 of the Bills of Exchange Ordinance mention the word customer. It's only mention, no definition. There's no definition given in the Bills of Exchange Ordinance. At least we had a definition, very broader definition for the bank in Bills of Exchange Ordinance. But when it comes to the customer, there's no definition at all given in the Bills of Exchange Ordinance. Right? That is 1927 Act Ordinance. We'll see what is the situation today. We have Banking Act, Act number 30 of 1988. Whether there is a definition for the customer in the Banking Act. Unfortunately, there is no statutory definition given in the Banking Act also for the word customer. Now, what is the situation? There's no definition in the Bills of Exchange Ordinance. There's no definition given in the Banking Act. When there is an issue before the judge or before the court of law, when the court has to decide who is the customer of the bank or what are the requirements to become a customer of a bank, then there's no provision in the Bills of Exchange Ordinance. There is no definition. Then there's no definition in the Banking Act also. Then what or how the judge has to decide? You remember the banking industry or the banking law is governed by English law. So when there is no provision in the statutory law, the judges has to decide or judges has to give an interpretation to the word customer based on the judgment or judgment given by the previous judges, especially the judgment given in English courts or British courts. So therefore, to understand who is a customer, we have to rely on judgments and we have to study those judgments. So that's what we are going to do now. Right. We'll go to the, we're going to discuss now some of the judgments, very important judgments with regard to the question, who is a customer of the bank. First case that we are going to discuss, you have to remember these cases, not much, only 4 cases that you have to remember. And you have to remember the name of the case and also the judgment given in the or the legal point decided in the case. So for your exam, it is very important, and also for your knowledge, it is very important, especially if you are working in a bank. If someone claims that he is a customer, you must understand whether he is a customer or not. If you also can't understand whether he is a customer or not, then we all are in trouble. Because you know that once, if he is a customer, he has rights and duties. as a bank, when the customer has a right, remember that you have a duty. The customers only can claim that they have a right, others can't, right? So therefore it is very important to understand who is a customer. So point number one, the case number one, Great Western Railway versus London County Banking Company Limited. Great Western Railway versus London and County Banking Company Limited. If you can't remember the entire name of the case, at least remember as Great Western Railway case. At least if you write like that, that you can get half mark for the point that you write, right? Great Western Railway. So what is the judgment or what is the point, legal point decide in this case? As per the judgment in Great Western Railway, customer is a person who holds any type of account with the bank, whether it's a current account, whether it's a savings account, fixed deposit, whatever, any type of account, if he holds, that he is a customer. In other words, if any person is not holding an account with a bank, is not a customer. Is not a customer. So what is the crucial point, or what is the point that you can decide whether the person is a customer or not? Whether he is maintaining an account with the bank. If he maintains an account, he is a customer. If not, he is not a bank customer. Now, in our day-to-day life, when we are in the office, bank, any person who comes to the bank, we call him a customer, right? Whether we don't check whether he is maintaining an account or not, right? We called him a customer. But when it comes to banker-customer relationship, it's very important. It's not the general, the practice that we exercise. Important thing is whether the customer, whether that person is maintaining an account with the bank. If he is maintaining an account with the bank, he is a customer, and there is a banker-customer relationship with that person, between the person and the bank. So that is number one. Number two, Commissioner of Taxation versus English, Scottish and Australian Bank Limited. Number two, right? So in this case, now the first part is very clear. If you have an account, you are a customer, or otherwise you are not a customer. There's no banker-customer relationship. Then we have a question: at what point that we consider a person is a customer, or a person or maintain an account? Now, for example, we say a customer comes and he just open an account. Then after that, no transaction, right? He just opened the account and then vanish, and after period of time, right? So the time has gone, we say 1 year, 2 years, he has not done any transaction. Can we consider him as a customer of the bank, right? Or we say a person comes to the bank and he wants to open an account. He inquire from the bank whether he can open an account. So can we consider him as a customer? He is not a customer of the bank yet, because he has not opened the account. So then he asks as an application, ask for application and you give the application, customer fill the application and hand over to the counter to open an account. He filled the application, hand over to the bank officer. So can we consider him as a customer now? Still, he is not a customer because the account is not open yet. Right? So then at what point that customer banker relationship start, or at what point that the law consider the account is open? Remember, so when we say the account is open, the point the account is open, the law consider the account is open at the point the number of the account is allocated to the customer. That is the point that the account that law considered that the account is open. For example, we say now the customer handed over the account opening documents. The bank officer took the account opening documents, and also customer gave money to deposit to the account, and that money also that you took and you put into the drawer and you forgot to open the account. We'll just assume that, right? Is he a customer now? He gave the application, he gave the money to deposit, but still he is not a customer because you have not allocated a number. We assume that on that day that the higher officers were not available in the bank, or they you can't contact them. Yeah, you have to get the approval of the higher authority to open the account, but because of the urgency that you open the account pending the approval of the higher officer. So that is the internal process that you have to obtain a higher officers or your officers or managers approval to open the account. However, because he is not there, that you open the account, allocated the number, deposit the money, but the approval has not yet given by the supervisor or the superior officer. Whether the customer, whether that person is an account holder, whether he has become a customer of the bank. So when it comes to law, your internal procedure is different, but when you allocate a number, that means the account is open. The person has become become the customer of the bank. So therefore, the banker-customer relationship has started. Then the question is it necessary to deposit money to the account to become a customer? Or do you have to do transaction? Do you need any transaction to be done? That is debit and credits, deposits and withdrawals to become a customer? The answer is not necessary to do transaction. Just opening an account is enough to become a customer. So the second case is Commissioner of Taxation versus English, Scottish and Australian Bank. As per this judgment, immediately after opening the account, that means immediately after allocating the number to the account, that person become a customer of the bank. Whether he has done any transaction or not is immaterial. Operation of account is not necessary. So that is point number 2. Then the next point, very important point. Now we know to become a bank customer, you have to have an account, you have to maintain an account, you have to open an account. Number 2, immediately that you open the account, you become a customer. Transactions are not necessary. It's not mandatory. Number 3, the case Wood versus Martins. This is very important case. Very important case. Little bit, I would say, you have to think little bit, think louder. with regard to this position. Now, we say a person, there is a person who is dealing with the bank without an account. He doesn't have an account. There's a person, he doesn't have an account with the bank. So when we say he doesn't have an account, we know that he is not a customer of the bank. There's no banker-customer relationship between that person and the bank. But he's dealing with the bank. Now, there can be a situation like that, right? Now, for example, we say, I want to obtain a loan, housing loan from a bank. We say, we take an example, HNB, National Bank, right? I go there and I discuss with the manager. I meet him and I say that I want to obtain a loan, and I gave my salary particulars and my deed copy and all other my family information and everything to the manager, and I get a housing loan application. I fill it and I give it to the manager. So this is a dealing. Actually, I'm doing a dealing with the bank, but I don't have an account yet with the bank. I have National Bank. So therefore, still I am not a customer. I am not a customer. So we say, whatever the reason, the bank delay the matter. So after 6 months, bank said, okay, your loan has approved now. To credit the loan or remit the loan, you have to open an account, savings account or current account in our bank. So then we will remit your loan proceeds to that account. So at that point, so I decide to open the account after 6 months of the first dealing. So I come and I open an account. We say I handed over the application in January 2021 and I opened the account in June 2021. As soon as I open the account, I become a customer of the bank. Remember, as per the previous two judgments, that is Great Western Railway, to become a customer, I have to open an account. So I have now opened an account. Second one, Commissioner of Taxation versus English Scottish Bank. Immediately after I opening the account, I become a customer. No transaction is necessary. Now in June 2021, I opened the account. Now, very important point here is as per the Wood versus Martins Bank Limited judgment. When I opened the account in June 2021, I become a customer of the bank, but not from the date that I opened the account, from the date that I first dealt with the bank. That means when I opened the account in June 2021, I become a customer of the bank from the January of 2021. So backdated. So very, very important and very, very crucial point to the bankers. Remember, right? Today, a person might dealing with you without an account. So he is not a banker, he is not a customer. There's no banker-customer relationship between you and him. He is just an outsider. So there's no banker-customer relationship between the bank and that person. So therefore, you have no duties, obligation towards him under the banker-customer relationship. He doesn't have any duties towards you and no rights against you under the banker-customer relationship because there is no banker-customer relationship. But remember this, very important point. If he opens an account in future day, then he become a customer. He becomes a customer. The dangerous point is, if he becomes a customer in future day, if he opens an account in a future day, he becomes a customer in a past day. That is the first date that he dealt with the bank. So the banker-customer relationship start from January 2021, not from the date that he opened the account, that is June 2021. Now what will happen? If you have divulged information during this period of this person, now, for example, we say I now handed over my application with my salary particulars and my income, everything, to the banks, HNB. In February, the bank manager has given this information to a third party. Now it is very clearly the information has divulged by the bank. In February, we say now we are in February. Can I sue the bank on breach of duty of secrecy under the banker-customer relationship? I like if someone answer to that question. I repeat again, I gave my application, loan application, to the bank in January 2021 with my income details. The bank manager has divulged that information to a third party in 2021 February. My question is whether I have a right to file action against the bank under the banker-customer relationship for the breach of duty of secrecy. Can someone please answer to that question? You can unmute your microphone and answer. Can someone please answer?
It's depend on the who is the third party, sir. The third party either may be a law or the central bank like regulatory authority. That bank manager has right to disclose or the information on the customer.
Right.
Therefore, it's depend on the who is the third party.
Basically, you are saying now the question is whether I have a right to file action. Listen to the question again. Whether I have a right to file action against the bank to claim damages on breach of banker-customer relationship, that is duty of secrecy. So your answer is that okay, if the bank manager has divulged the information to a law enforcement authority, then there's no wrong has done by the bank. So therefore, I cannot sue the bank. If the bank manager has divulged that information to a third party who is not law enforcement authority, then I have a right to file a case against the bank on breach of duty of secrecy. So that is your answer, correct?
Yes, sir.
Okay, anyone else? Can someone else also answer to the question?
So he can't, since he's not a customer.
Can you speak a little louder? First part didn't hear.
He can't file since he is not a customer yet.
Okay, right. So your answer is that I have no right to file action against the bank under breach of banker-customer relationship because I am not a customer. Is that correct? Yes. Yeah. Okay. Thank you for both of you. The correct answer is the second answer. Right? You see, now just see To become a customer, I have to open an account. I have not opened an account yet. I haven't opened the account yet. We are in February. My loan application is still processing. So therefore, I am not a customer of the bank. There is no bank-customer relationship between us, between HNB and me. So therefore, in February, I can't sue the bank on breach of banker-customer relationship contract because there is no banker-customer relationship between us yet. Okay, so that is the position. Now say I came to know that my information has been divulged by the bank manager to a third party who is not a law enforcement authority, and without my consent that he has given this information to one of my competitor. As we say, I am a businessman, one of my competitor has got that information from the bank manager. So then what I do, I go and we are in April, I go and open an account in the commercial in HNB. April, I open an account. What is the position now? In April, can I sue the bank? After opening the account, in April, can I sue the bank for the breach of duty of secrecy in February 2021? I opened the account in 2021 April. Bank has divulged this information in February 2021. At that time, I didn't have a banker-customer relationship. What is the position? Can the same person, I don't know, what's your name, please?
Prasad.
Prasad, can you answer to that question, Prasad?
Yeah, now he can file the case.
Yes. So, but I opened the account in February now. But this divulge of information has happened in February.
But as per the Woods and Martin Bank's law, it says from the first date he started his dealing with the bank, so he can file the case.
Very good. Very good. That is the correct answer, right? So remember, as per the Wood versus Martin's case, it is not the date that I opened the account. My banker-customer relationship start from the date that I first dealt with the bank. So therefore, as bankers, you have to be very careful, right? If you get any information of any person, whether irrespective of whether he is a customer or not, please do not divulge that information to a third party without the consent of that person. Because as per this judgment, Wood versus Martin's case, that person can open an account tomorrow. If he opens an account tomorrow, he become a customer and the banker-customer relationship start from yesterday. And if you have divulged information today, you can be sued. So therefore, it's very clear, it's very dangerous that don't divulge information. This is point number 3. Okay, so those 3 points that you have to remember, very important. How you decide a person whether he is a customer of the bank, whether there is a banker-customer relationship between this person and the bank. It all depends on these 3 judgments. That is Great Western Railway, Commissioner of Taxation versus Scottish Bank, and Wood versus Martins. You can't get any point at the examination for the question of who is a customer unless you write these three cases, these three judgments, right? So remember that, it's very important. And the next point is number 4. Now, when we say banker-customer relationship, in this relationship, one side we have a bank, the other side we have a customer. So there's a misconception among among us or people. They always think the banker-customer relationship. When we say banker-customer relationship, in one end there has to be a bank, in the other end there has to be a person, natural person or legal person. But remember, even though we say it's a banker-customer relationship, one bank can be a customer of other bank. For example, we say HNB can maintain an account in commercial bank. So in both ends we see two banks. But what is the relationship? The relationship is not bank-bank relationship. It is also a banker-customer relationship. So one is a bank, the service provider. The other bank is the account holder who is the customer. So relationship between these two banks is banker-customer relationship. So the point number 4 is one bank can be a customer of another bank. Lloyd Bank versus Chartered Bank of India and China. This matter, you can see in both ends they are. We can say two banks. If one bank is collecting or clearing checks for the other banks, the banks becomes customer of a principal bank. So therefore, that is number 4 that you have to remember. One bank can become a customer of another bank. So that is how we are going to recognize or identify the customer. Okay. So now we have identified who is the bank. We identified who is a customer. We identified what is the banking business. And now we are going to identify, or we are going to discuss about the banker-customer relationship. The relationship. What is the relationship? What type of relationship we have between the bank and the customer? So remember this, I have given in red color here. The banker-customer relationship is a contract. The basic nature of the banker-customer relationship is a contract. It's a legal contract. It's a contractual relationship. It's a contractual relationship. Now, what are the other contractual relationship that we see? See in the common day-to-day life. Take the marriage. Marriage is a contractual relationship. It's a contract between two people. Right? Likewise, the relationship between the bank and the customer also is a contract. It's a contract. Right? The banker-customer relationship creates a number of legal rights and duties. When we say it's a contract, remember, when we enter into the contract, that we have lot of responsibilities. Take the example, marriage, right? When you enter into the marriage, each spouse, they have responsibilities, duties and rights under the contract. So likewise, when we start banker-customer relationship, it's a contract. If it is a contract, then the parties, that is the banker and the customer, both gets rights and duties, legal rights and duties. They get legal rights and duties. Important point here is most of these duties, rights and duties under the banker-customer relationship are implied rights and duties. Implied, what do you mean by implied? Now, you know, when we are entering into a contract, right? We normally, when we enter into a contract, we sign a written contract. When we say contract, remember, there are several types of contracts. Number one, we have written contracts. Number two, we have verbal contracts. We have implied contract or contract by conduct. So there are several types of contracts. Today, in today's context, we have another type of contract, that is e-contracts, electronic contracts, right? So there are several types of contracts. It is not necessary to have a written contracts all the time. Some contracts are written, some contracts are not written, unwritten, verbal. Some contracts are by conducts, they have contracts. Now, for example, this registration of marriages came to operation in Sri Lanka after introduced the registration of marriage ordinance. Before that, before British came to the country, didn't we have families, marriages? We had, but we never had a contract, written contract. We never signed. But by conduct, we had an implied contract. A man and a woman live together, they have children, they have a matrimonial house. The people accept them as a family unit, as a husband and wife. They have a verbal contract. Man asks whether you would like to be my wife. Wife says yes. Offer and acceptance, verbal, nothing in writing. And they start family life. They have children, they have a matrimonial house. Then the others, society, accept them as a family, as a husband and wife. So remember, the contract can be written, a contract can be verbal, contract can be by conduct. So therefore, if it is a written contract, the terms or duties and responsibilities are written. If it is a written contract, for example, you say you go to a bank and you obtain a loan. You sign a written contract, loan agreement. You sign a loan agreement. So terms and conditions are written in the agreement. So if the agreement is breached, so terms and the conditions are very clearly written, so you can go to courts and ask to implement the terms and conditions which is written. So sometimes we enter into a verbal contracts. So then the terms and conditions we have agreed verbally. There's nothing in writing. So pure verbal contract. There are some contracts, part of the contract is written and part of the contract is verbal or by conduct. So banker-customer relationship also partly written contract and other part is unwritten. The most important part here is most of the terms or implied legal rights and duties under the banker-customer relationship is implied, unwritten. Now, for example, when you go to a bank and when you open an account, what is the document you get? You get a loan, you get account opening documents, application, general terms and conditions, signature card, KYC application. So those things you get and you fill and you give it to the customer. If you are the customer, you fill it and you hand over to the bank. So bank, they get and they sign and approve and open an account. So the question is, what are the terms and conditions that we agreed? So terms and general terms and condition printed in that application is there. That is only part of this relationship. So other duties and responsibilities between the banker and the customer are not written, implied. So that is very important that you have to remember. Most of the terms and conditions under the banker customer relationship is unwritten or implied legal rights and duties, not written in anywhere. Then the banks and the customer have duties and obligation on each other under the contract banker customer relationship. So that is the nature of the banker customer relationship. If I summarize this, banker customer relationship is a contractual relationship. It's a contract. This contract is partly written and partly implied. Since it is a contract, it creates legal rights and duties. Most of the legal rights and duties are implied rights and duties. That means not written, implied duties and responsibilities. So under the banker customer relationship, the parties, that is banker and the customer, they have duties on each other. That means when a banker has a duty towards the customer has a right towards the bank. When the customer has a duty towards the bank has a right against the customer. Your right you can exercise against the other person. Your obligation is a duty cards upon you to perform to the other person, for the other person. So he has a duty, yes, or rather he has a right to claim that from you. So that is about the relationship between the banker and the customer. So if you have any questions from this up to now, if you have any unclear area, any doubt, that you can ask question and clarify. If you have any question, please ask. Any questions? Okay, since you don't have any questions, we'll go to the next one. Now we know what is the type or nature of the banker customer relationship. So then we are going to discuss the duties and rights and duties of each party under the banker customer relationship. So first we take the banker's rights and duties. Now we have two parties in the relationship, banker customer relationship. We have one side bank, the other side the customer. I said one party has a duties and responsibilities for the other party. So we have to study both sides. Now we'll take one side first. That is, we take bank side. Bank's rights and duties. What are the bank's rights and duties under the banker customer relationship? Okay, first we see what are the rights the banker has against the customer. What are the rights that you can exercise against the customer? Right? I have given here some important rights that we exercise as banker under the banker customer relationship. Not all, but important rights. Right? First one, the first right, the bank has a right to charge interest and fees. This is an implied right recognized under the law, under the banker customer relationship. The bank can charge interest and fees. Bank has a right to charge interest for the advances that they give to the customer. For example, we say the bank allowed customer to overdraw his account, casual overdraft. We called it casual overdraft. No limit mark, right? No pre-arranged overdraft. Checks issued by the customer without sufficient funds in the account. Check comes to the bank. Bank manager decide to pay the customer's account by overdrawing the account. No written agreement, no pre-arranged facility, not a pre-arranged facility. So bank decide and pay. So account get overdrawn. The account get overdrawn when the check is paid. We say now the account is overdrawn. The customer has to settle the OD and bank charge interest for that. Question is whether the customer can come and say that I will pay the money that I took but not the interest because I have not agreed to pay interest. There's no written agreement. You have no right to charge interest for overdraft. Customers won't say that. Customers won't say. Why? Customer know the bank has a right to charge interest. Where it says so? If you have read your account opening documents in general business terms and conditions, that clause is there. I am sure many of the bankers here have not read these terms and conditions. However, even though that is not in that terms and conditions, this is a recognized right to the banks under the banker-customer relationship, recognized by court of law. That is, bank can charge interest for the facilities of advances that they give to their customers. That is number one. Then also the bank can charge fees that you charge for the services that you provide for the customers. Number one, you can charge interest, the bank can charge interest for the advances. Bank has a right to charge fees for the services. Number two, the bank has a right to change the interest rate. Right? This is number two. Now, depending on the economic situation of the country, depending on the market condition, the lending rate change. Lending interest rate change. The banks lend money. So we say now bank has granted the overdraft facility today. We say that today the interest rate for overdraft facility, we just say it's 11% per annum. 11%. We just say so. Right? After 2 months, right? Depending on the market condition change, now the lending rate has gone up. We say now it is 14%. The question is whether the bank can change the interest rate or can the bank charge higher rate. So under the banker-customer relationship, unless you have agreed differently, the bank has a right to charge higher interest rate or bank has right to change interest rate. That is number two. I said unless you have agreed otherwise. That means if you have agreed to charge flat rate, right? You say customer, okay, even the market conditions change, we will not change the interest rate, right? We say it's a fixed rate. When we are lending, we have two types of ways that we charge interest. One is fixed rate, the other one is a variable rate. Variable rate means that when the market condition change, the interest rate change. It can go up or down depending on the market condition. If it is a fixed rate, irrespective of the market condition, you charge a fixed rate that you have separately agreed. So if you have agreed to charge fixed interest rate, then you have no right to change the interest. That means that you have give up your right to change the interest rate. So you have to fix the rate. You can't charge higher rate. So otherwise, if you have not agreed for a fixed rate, the bank has a right to change interest rate. That has been recognized by the courts. The customers can say that customers can challenge the interest rate, but when you go to courts, courts will accept that the bank has a right to change interest rate. That is number 2. Number 3, right to combine accounts. Right to combine accounts. Right. So what is this? What do you mean by combining of account? Right. I will explain this with an example. Right. We say we have a customer. Can everyone see the board, whiteboard? Can someone please respond? Can you see the whiteboard?
Yes, sir.
Right, thank you. We say we have a customer A. This customer is maintaining 2 accounts. We say 2 current accounts. Account number 1, account number 2. Account number 1 and account number 2. This customer, these both are current accounts. These are current accounts. And account number 1, he has 1,000 rupees balance, credit balance in his account. And account number 2, he has 2,000 rupees in his account balance. Both are current accounts. Or we say one is a savings account, doesn't matter, but for the time being we say both are current accounts, and he issue a check from this account for 2,000 rupees, or we say 3,000 rupees. He issue a check. He issue a check for 3,000 rupees from account number 1. It's a current. Now, when we say this check is given to a third party, this check deposited to this account by this third party to his account, and now the check has come for a payment. Now what is the situation? There's no sufficient funds in the account number 1. There's no sufficient funds. Now bank has 2 options. Normally in day-to-day practice, we know that there are 2 options. What is the option? Option number 1. Option number 1, you can return the check. Return the check because insufficient funds. That is number 1. Option number 1. What is the other option? The bank can take a decision, the manager can take a decision and pay the check by overdrawing the account. That is number 2. Now when you see this scenario, you see under the law, the bank has another right or another option recognized by law. What is that? That is called combination of account. Now you see, though he has only 1,000 rupees in this account, if you consider the other account also, if you combine these 2 accounts, then you have 3,000 rupees. 3,000 rupees, which is sufficient to pay this check. Right? So bank can exercise this right and can combine these 2 accounts and pay the check. Pay the check. This is called combination of account. Combination of account. This is just an example, right? One example how we can combine an account, the bank right to combine accounts, there can be other scenarios also, right? So in a combination of account, normally the benefit goes to the customer, not to the bank, right? You normally combine the accounts and you pay the check. So benefit goes to the customer. His check will not get returned. This is called combination of account. This is not mentioned in or written in any agreement. However, the combination of account is a right given to the banks. But I hardly see the banks exercise this. Normally, most of the time, 99%, if check comes without sufficient funds in the account, banks won't combine accounts of the customer. Bank will reject the payment or return the check. Why is that? One thing, the bank officers, they don't know that they have a right like this. That is number one. That is number two. Even though they know there is the right like this, they don't exercise this. Because it is high risky. There's a high risk. The customer can challenge. The combination of your intention is good. You want to help the customer. The benefit goes to the customer. But we never know whether the customer wants to return the check or he wants you to dishonor the check. So then customer can find fault with you, with the bank. So the bankers, they don't want to take unnecessary risk. That's number one. Number two, rather, then the combining of account, even though that we have a right to do that, it is subject to certain qualifications. For example, you can combine the accounts if those accounts are maintained by the customer in the same capacity. So that is different thing that you have to study lengthy. So basically, one customer can maintain accounts, more than one accounts, but in different capacities. For example, a person can maintain a personal account under his name, and he can maintain a professional account under the same name, right? So then the same customer maintaining two different accounts in two different capacities or categories. If it is so that if you combine these two accounts, right, the customer can challenge it. So therefore, you have a right, but you have a discretion whether you want to exercise the right or not. So if you have a right, you remember you have a discretion. You don't want to follow you don't want to exercise your right. It is your right. You have a discretion. But if you have a duty, of course, you don't have the discretion, you have to do it. But right, it is a right to combination of the bank. It is not a right of the customer, it is a right of the bank. So you have the liberty to decide whether you want to combine the account or not. That is combination of account. Then right to set off. Again, it is a right to the customer, right given to the banks under the bank-customer relationship. The bank has a right to set off the customer's account. So what is that? Right to set off is that we can take the same kind of scenario. We say customer issue a check from this account for 3,000 rupees and bank pay the check by overdrawing the account. Now after paying the check, there is a balance of minus 2,000 that is overdrawn the account. There's a OD balance. Now the bank can set off this 2,000 rupees in the other account set off this money and recover this 2000 rupees, then balance will be zero. So the benefit of the set off comes to the bank. You recover the money from the customer. Right? That is called right to set off. Again, the right to set off also subject to certain qualifications. Now you might wonder, if you have right to set off, if the bankers have right to set off the customer's account, why do you take a letter of set off? It is not necessary if you have a right. But it is important to have the right, the letter of set off, because right to set off is subject to certain qualification, subject to conditions. So same thing, like in a combination of account, you can set off the customer's account if one customer maintain more than one account in the same bank, but in the same capacity. Then the bank has right to set off. Otherwise, that means if the one customer maintain several accounts in the same bank, but in different capacities, the bank has no right to set off. Right to set off. For example, we say customer, say me, right? As a lawyer, I am maintaining a personal account. That is my personal money. And also, I maintain another account in the same name, but my professional account. Two different capacities. We say from my personal account, I issue a check. And the bank pay the check by overdrawing my personal account. And I don't pay the overdraft. So what the bank did, they set off my professional account, the money in my professional account, and recover the outstanding of my personal account. The money in my personal account is not my money. It is my client's money. My clients give money to pay, we say, stamp duty, taxes, whatever. That money I kept in my professional accounts, and I am holding that money as a trustee for my clients. If bank takes that money, I can sue the bank, because bank has no right to take others' money to set off my personal dues. So therefore, right to set off, even though their right to set off is there to the banks, exercising of right to set off is subject to certain limitations. That is why we take letter of set off. If you take a letter of set off, if I agree to set off this account number 1 against and account number 1 and 2, so then thereafter I can't challenge, because I have given that right to the bank in writing. So that is why we are taking letter of set off. Right. That is about right to set off. Any questions up to now? Combination of accounts, right to set off. Do you have any questions? Okay, then I'll go to the next one. The lien right. The bank has a lien right. What does it mean? It means, this is again unwritten implied right of the bank under the banker-customer relationship. What does it mean? In simple language, if I explain this, it's like this. If a bank holds the possession of the goods of a customer the bank has a right to hold the goods until the customer settle the total dues to the bank. Right? I will explain with an example. Then you will understand. This is like this. Right, we say we have a customer A, he obtained a loan of 1 million from the bank, we say in 2020. He obtained a loan from the bank. Right? He obtained a loan from the bank. And he gives a collateral security. We say he has mortgage goods. He has mortgage goods, and the goods mortgage to the bank for this particular loan, 1 million loan. This person again, he obtained another loan. We say this time he obtained another loan, loan number 2, for 1 million in 2021. But no security this time, no collateral. This is given as a collateral for the loan number 1, and he obtained another loan in 2020 without any security. We say the customer in 2021 May, he settled the first loan. Loan number 1, he settled. He paid this. Now what is the situation? If we pay the loan, this loan, the bank has to release the good. Bank has to release the mortgage. However, we say at that time, in May 2021, this loan has gone bad. This loan was gone bad. Right? Now what is the situation? The bank, under the banker's lien, can hold this good without releasing the mortgage, can hold the goods until this customer settle this loan. You see, now this mortgage or these goods has not pledged to the bank for the second loan. However, the bank has a lien right. Under the lien right, the bank can hold this goods as a security for the second loan also until customer settle total due to the bank. That is called banker's right to lien. Right to lien or lien rights. Clear? Okay, that's right. So then the next one, the last one, right to close the account. Bank has right to close the account. Any account of any customer, bank has right to close the account at any time. When I say at any time, bank, when the bank is closing the account of the customer, bank has to give a reasonable notice to the customer. Reasonable notice should be given. Without giving notice, the bank has no right to close the account of the customer. Sorry. I said bank has to give reasonable notice. What is the reasonable? What do you mean by reasonable notice? Reasonable notice means that you have to give, the bank has to give a reasonable time period to the customer to before you close the account. For example, if you decide, if the bank decide to close the account of a customer, you can't do overnight. You can't say that immediately we are closing your account. The bank has no right to do that. Bank has a right to decide whether you are going to continue with the customer or not. Bank has a right to close the customer's account. That right is there. But that right is subject to a condition. What is the condition? The bank has to give reasonable notice. So reasonable time that you have to give to the customer. What is the reasonable time? And why do you have to give reasonable time? Why do you have to give reasonable time? You have to give reasonable time to the customer to make arrangements. So make alternative. What do you mean by that? We say customer is maintaining a current account. Bank decide to close the relationship. You don't want this customer anymore. You want to exit. Right? Can you just close the current account immediately? Can't. Because the law says that you have to give reasonable notice. Why do you give reasonable notice? What is the requirement? Requirement is the customer has to make arrangement. Arrangement means if it is a current account, the customer may have already issued checks to third parties. If bank close the account, what will happen? All these checks, all those checks that he has issued can get returned. So therefore, he has to make an arrangement. He has to make an arrangement. That means that he has to open a current account in another bank, and he has to replace those checks from the checks from that particular account. For that, the customer need a time. So therefore, the bank has to give a reasonable time to the customer to arrange alternatives. So what is the time period? What is the reasonable time period? The next question. How do you decide? Where does it define the reasonable time period? Reasonable time period is not defined in anywhere. It's not written. So it is the call of the bank. It is the decision of the bank. What is the reasonable time? You have to give reasonable time, but the reasonable time period is not decided. So then how do you decide the reasonable time period? When you are deciding, when you decide to close an account, you have to give reasonable notice. The reasonable time period you decide based on certain features of the customer or the account. So what are the things that you have to consider when you are deciding the reasonable time period? First, you have to think about the nature of the account, whether whether it is a savings account or whether it's a current account or any other type, that is fixed deposit or NRFC, RFC. We have different types of accounts. You have to consider about the nature or the type of the account. If it is a savings account, you can send a letter to the customer and say that we are closing your account and you have 7 days to withdraw your money, or otherwise we will close the account and we will return your money. But if it is a current account, 7 days may be not enough. So therefore, that you have to decide what is the reasonable time period. It could be 14 days, it could be 1 month, it could be 3 months. How do you decide that? Then you have to see the previous transaction of the customer, transaction pattern of the customer. So if he has issued, say, 100 checks per month, that means that he has to collect all the 100 checks in circulation or whatever the checks that he is in circulation, and he has to open another account and has to replace those checks. So therefore, it takes time. So you have to give reasonable time, maybe 3 months. Maybe 3 months. So that is number 2. Then the nature of the customer, the type of the customer also that you have to consider when you give notice. Whether it is an individual customer, whether it's a partnership, whether it is a corporate customer. If it is a corporate customer, a company which has lot of transaction per day, then you need a lot of, a long period you have to give to the customer as a reasonable time to make arrangement. But if it is an individual customer who has a current account where he has not issued checks last few months, so then 14 days might be sufficient. So likewise, the bank has to decide the time period, the reasonable time period that you give to the customer to close before you close the account. So those are the rights of the banks that you can exercise under the banker-customer relationship. Those are the rights, unwritten or implied right under the banker-customer relationship. So if you have any questions from this that you can ask now. Do you have any questions? Okay, so we'll have a break now. It's 3:35. We'll have 15 minutes. That means I will meet you at 3:50. Right. Okay, we'll start again. We discuss the bankers' rights. Now, next, we are going to discuss the duties of the banker under the banker-customer relationship. Right. Under the banker-customer relationship, what is the primary obligation of the bank? What is the primary obligation or primary duty towards the customer of the bank? You know, the banker-customer relationship starts when a person open an account with the bank. If the bank allows a person to open an account, the customer or the account holder's intention is to pay or deposit money and issue bills, checks. If it is a current account, issue checks. That is the idea, or that is the intention of the customer. So therefore, if bank allow a person to open an account, especially if banks allow a customer to open a current account, the primary obligation of the bank is to receive money and collect checks or bills of the customer account holder. That is the primary obligation. In other words, you can't basically, a bank cannot say that we will allow our customer to open an account, but we are not allowing you to issue checks. If it is a current account, it's a primary obligation, or it's a right of the customer to issue checks. Customer has a right to issue checks. The bank, on the other hand, has an obligation to collect the checks and pay the checks of the customer. And the customer has a right to deposit money, and third parties also can deposit money to the customer's account. So the bank has to accept received money on behalf of the customer. That is a primary obligation from the bank side, primary duty of the bank to the customer. Then the second obligation or duty to the bank under the banker-customer relationship, bank is obliged to provide banker's opinion. If you allow a customer to open an account, when the banker-customer relationship starts, the bank is obliged to give banker's opinion. Now, what is banker's opinion? What do you mean by banker's opinion? I'm sure the most of you are not familiar with banker's opinion. By my experience, when I ask this question from the bankers, their answer is banker's opinion means when on the request of the customer, we are confirming the balances of the customer to third parties. That is banker's opinion as per as per my previous experience. That is the answer given by the bank officers. Actually, the banker's opinion is not that. Banker's opinion, I will explain you with an example. Then you will understand what is banker's opinion. It's like this. We say we take two banks. We take NDB and HNB. Two banks. We take two banks. We take two banks. We say.
Sir, excuse me, sir. We
Yes.
cannot see you.
See you in the sense, can't you see the whiteboard? Or
This whiteboard.
can't see the whiteboard? Still can't see the whiteboard? Or can you see now? Can you see the whiteboard now, please?
Now can, sir.
Okay, right. Okay, can you see now? I hope you can see. Okay. We say we have two banks. We say this bank has a customer A and HNB customer is B. We say these two are both businessmen. They are businessmen. A wants to invest. We say 25 million in B's business. He wants to do a investment. These two had never done any business before. Now, as you know, when a person making an investment, he wants to know the details, the real details of the other business that he is going to invest. So now A wants this information from B. So how can he get this information? He can request this information from B. If A requests this information from B, there's no guarantee that B will provide correct information to A. So therefore, A has to take this information from an independent party, from a third party, independent third party. So this information, the A's business information is available with HNB because they are the business account of B is maintained at HNB. So all the business dealings, bank the transaction has gone through HNB. So therefore HNB knows the details of business. Now A can request this information from HNB. The question is whether HNB can provide this information to A. HNB can provide this information to A if B consent. But there is another way that A can get this information without the consent of the HNB cannot divulge this information. If it is so, then this will be a breach of duty of secrecy. So providing this information to A is not possible without the consent of the customer. So therefore, this is not possible. So therefore, there is another way that A can get this information. How? And now you see, between NDB and A, there is a banker-customer relationship. There's a banker-customer relationship. So under the banker-customer relationship, NDB has a duty to give banker's opinion or to obtain banker's opinion. So A can request from his bank to get banker's opinion. When the request comes from the customer, NDB has the obligation to make this request from HNB. So HNB then provide the opinion, banker's opinion, to the other bank. So this bank then provide this opinion to the customer. So this is the way that banker's opinion works. Remember, this is banker's opinion. But the word opinion is very important here. Why I say that? Under the banker's opinion, it is wrong that if you provide the account details. Under the banker's opinion, the bankers are not allowed to give any particulars, any numbers. If you provide numbers, then that is a breach of duty of secrecy. But you are free to give an opinion. So the HNB is giving an opinion about their customer. Likewise, one day you might have to give an opinion on your customer. Remember, if you are giving an opinion, it has to be opinion. It is not data. It is not account details. It should not be figures. So what are the opinions what type of opinions that we can provide? So I have given here the bank could provide status report on their customers. The status reports gives a general indication of financial status, business integrity of the customer. That is the opinion that you can give. What is it? General indication of financial status or business integrity of the customer. So under the banker's opinion, you see there's no way that you can divulge information of account details. Those things you can't provide. So what are the types of status reports that we normally provide? I have given here 3 general types of opinions that we normally provide as a bankers. Number 1, respectable, trustworthy, and considered good for your figure and purpose. Now, what is that? Now, in this example, Mr. A is going to invest 25 billion in Mr. B's account, in the business. Now, A has requested banker's opinion. HNB gives an opinion like in the first opinion, like number 1. That says respectable, trustworthy, and consider for and good for your figure and purpose. The purpose is investment. Figure is 25 million. Now the HNB says the customer is trustworthy. So that means the customer has not defaulted, right? He's a trustworthy customer, and also good for your good for your figure and also purpose. So for your investment and your figure, we say it's good. That means that you can easily invest 25 million rupees in this business because his business is very good and he is a trustworthy customer. So who gives the opinion? HNB give the opinion. So based on this opinion, a third party, Mr. A, will make a decision whether he is going to invest money or not. So that number 1. Number 2, respectable, trustworthy, but your figure is larger than we familiar to see. What does it mean? It means this customer, HNB says the customer is trustworthy. That means he has not defaulted, he has taken loans, he may have paying, but he is not a defaulter, so he is a trustworthy customer. But your figure is larger than we familiar to see. That means the amount that you are going to invest is a big amount. This person has a small business. So therefore, it gives an indication to the third party whether that customer is trustworthy, that is there. Then the choice is the third party whether you are going to invest money or not. Because the amount that you are going to invest as per the HNB is a big amount. The business is a small business. So that is number 1, number 2 type of opinion. Number 3, respectable, trustworthy, but has recently opened account and we cannot speak for your figures. So the number 3 type of third type of opinion says respectable and trustworthy customer. So he is not a defaulter, but he has recently opened an account with us. So therefore, we cannot speak about the figure. So we can't, we don't have enough information of his business. So therefore, we can't make any opinion. We can't give an opinion about the business. So that is the third type of opinion. So if it is a second or third type of opinion, based on that, the third party, Mr. A, will decide whether he is going to invest money or not. So therefore, you can see by looking at these 3 types of opinions, any of these opinions does not carry a figure, right? Does not carry a figure, no data, purely an opinion, right? So therefore, remember, if you are supposed to give an opinion, it has to be an opinion like this, not any data, information, or figures you can't mention in your opinion. And what will happen if bank manager, what is the bank manager's liability? What will happen if it is too favorable? Misrepresentation or negligence opinion. That means the bank manager, HNB bank manager, gives a favorable opinion, misrepresentation, that means the opinion is wrong because of the misrepresentation or negligence. Then that means for example, we say the customers, that is B, Mr. B's business is very small, right? But bank manager, HNB bank manager provides an opinion like number one time. So that says trustworthy, respectable, trustworthy customer and considered good for your figures and purpose. Small business, customer is trustworthy, he has not defaulted, but the figure that figure 25 million investment is very large consider to his business. So the opinion is wrong and it is favorable to the customer of HNB. So based on this the opinion, Mr. A we say decided to invest money 25 million in this business. So afterward he lost his money. Now what is the responsibility of the manager who provided the opinion? So he is responsible for the third party, that is Mr. A can sue the bank manager, that is HNB bank manager, who provided the bank's opinion, wrong, misleading, negligence opinion. So he can ask damages. Then what will happen if it is too unfavorable? If it is unfavorable, so for example, we say the customer is a trustworthy customer, B is a trustworthy customer, and he's doing his business well, it's a big business, right? 25 million easily can invest in this business because their return is very high. So therefore, any investor can invest 25 million without any hesitation. So all this information is available with HNB, but HNB provide, we say, an opinion like number 3, respectable, trustworthy, but has recently opened account with us and cannot speak about your figures. That means that we say the customer, Mr. B, has he's maintaining this account last 15 years, his business account with the HNB, but the bank manager has given an opinion saying that it is a recently opened account, so therefore they can't recommend or they can't give an opinion on the business. So based on that, because of the opinion is not favorable, is too unfavorable, Mr. A decide not to invest money. Now Mr. B lost the business opportunity, the investment he didn't get. So then in a situation like that, Mr. B, the account holder, can sue his bank manager, that is HNB manager, for the breach of duty. What is the duty? To provide honest opinion. So the bank manager has provided wrong or negligence opinion. Because of that, he lost the opportunity, business opportunity. So he can claim damages from the bank that he maintains his account. So that is number 2, banker's opinion, the duty of banker's opinion. Then number 3, duty to honor the customer's check. So before that, if you have any questions from here, that you can ask now. Primary obligation, receiving money and collect bills. Second obligation of the bank, providing banker's duty opinion. Right. If you don't have questions, then I'll go to the next one. Duty to honor the checks. Now I said, if bank allowed a customer to open a current account, the bank has an obligation to honor the checks of the customer, because the current account holders are entitled, they have a right to issue checks. The right to issue checks is not practical unless the bank accept the checks and pay. So therefore, the duty cast upon the banks to honor the check. So, but however, this duty is subject to a certain conditions. You have to remember this. This is an implied duty on the banks. this duty is an implied duty. This is not written in anywhere, not in the account opening documents or general business banking. It not mentioned. However, it is an implied duty. If the check is drawn in the proper form, so bank has a duty to honor the check if these conditions are fulfilled. These conditions are fulfilled. What are the conditions? Number one, if the check is drawn in the proper form. When you get a check, if you are in the if you are in the bank, if you get a check for the payment, the first thing that you have to do is you get the check, you then have to observe the check and see whether the check is in proper form. So you have to check. I have seen when I present a check, the bank officers, they take the check and they go through the checks and see whether the check is in proper form. That is number one. So for example, we say amount is amount differ, or signature is not tally, or signature he has not signed, or date is not written. In a situation like that, the check is not complete. So therefore, the check is not drawn in the proper form. So they can't. Then the bank cannot pay or bank cannot collect. So the first condition is it has to be written in the proper form. Number two, if sufficient funds are available or if OD is given. Now, after checking all the features of the check, if you are satisfied that the check is proper, then next thing that you have to see whether the sufficient funds available in the account to pay. So if sufficient funds are not available in the account, you have to see whether that bank has granted him an overdraft limit. We say now the customer has sufficient funds in the account, or he has given an overdraft. Now the second condition also fulfilled now. Third one, then you have to go to the third one. You have to see if there is any legal barrier to pay. So then you have to see whether there is any legal barrier, any legal barrier to pay the check. Now you see sometimes you get court orders. Court orders get seizing the accounts, or restricting the bank by paying checks, or sometimes you get orders from Inland Revenue Department ordering the bank to seize the customer's account. So if order like that or a legal barrier is there, even though the check is in proper form and it is the funds available in the account, bank can't pay. So therefore the third the element or third conditions also has to fulfill. Now we say the third condition also fulfilled. Third condition, that is when you check the account, there's no legal barrier. So therefore the third condition is also now fulfilled. Then the fourth condition, we go to the fourth condition. If the check is presented during the banking hours. Fourth condition is that we say the check has been presented after the banking hours. So normally, you know, as bankers, when you are in your branch, that the bank has published the banking hours. That is the duty of the bank, that you have to publish the banking hours. Different bank, they have different time slots, working hours. However, that you have to mention, you have to publish your banking hours. It could be 8 to 2 or 9 to 3 or 9 to 5 or whatever. You have to mention that, you have to inform the customers by putting a notice. So we say the check is presented after the banking hours, not within the not during the banking hours. not between the banking hours. So in a situation like that, what is the position? Can we pay? Right? So then one thing is, if that condition is not fulfilled, the bank has no duty to pay. Whether you pay or not, it's a different thing, but bank has no duty. So check has to be presented during the banking hours. Next one. Now we say all 4 conditions are fulfilled. The check is presented during the banking hours. Next one, the bank has to see whether the check is presented to the same branch where the current account is maintained. Next one is that, right? Fifth one is whether the check is presented to the same branch. For example, we say the current account is maintained at Boralla branch, HNB Boralla branch. Check is presented during the banking hours to the Anuradhapura branch of HNB. The question is whether the bank has a duty to pay the check. Can someone answer to that question, please? Right? The question is, account is maintained at Boralla HNB branch. Check is presented to Anuradhapura HNB branch during the banking hours. Question is whether HNB has a duty to pay the check. That is question number 1. Question number 2, whether HNB can pay the bank, can pay the check. 2 questions. Can someone answer to the question, first one? Gentleman, the gentleman who answered the previous question, can you answer? Prasad, hello, can you hear me? Can someone please answer to the question? Please try. The check is presented to the Anuradhapura branch. The account is maintained at Boralla branch. The first question is whether the bank HNB has a duty to honor the check. Can someone please answer? Dilshan, can you answer? So no one wants to answer. Okay, right. So then I'll answer. The answer is the bank has no duty to honor the check. Bank has no duty because it says bank has a duty to honor the check if it is presented to the same branch. If it is presented to the same branch. But if it is presented to a different branch, the bank has no duty to honor the check. Bank has no duty. So bank, in other words, bank, if they want, they can return the check. Next question, whether the bank can pay the check. Not as a duty, but whether the bank can pay. Yes. In today's context, remember, even though the bank has different branches in all over the country, all branches are interconnected via a system, computer system. So one branch can see the accounts of the other banks, accounts of the customers of the other branches. So therefore, they can view the account and they can pay. that as an additional service, not as a obligation or duty. So remember, if the check is presented after the working hours, bank has no duty to honor the check. If it is presented to a different branch where the account is maintained, then the bank has no duty to honor the check, but bank can pay the check, not as a duty, but as an additional service or extra service. So if these five conditions are fulfilled, all conditions are fulfilled, then the bank has a duty to honor the check. Duty, it's a duty. If all five conditions are fulfilled and bank, whatever the reason, don't pay the check, dishonor the check, what is the situation? Then it is a breach of duty, breach of banker customer relationship. So under a situation like that, the customer can sue the bank and ask for damages. So what are the so remember, because of that, if the conditions are fulfilled, if five conditions are fulfilled, then it is a duty. The check is in proper form, if money available in the account, there is no legal barrier, the check is presented during working hours, if the check is presented to the branch, then all five conditions are fulfilled. Bank has a duty to honor the check. Bank has no reason to return the check. If bank returned the check or didn't pay the check, it's a breach of contract. In a situation like that, the customer can sue the bank and ask damages. Then we come to another duty, a duty of secrecy, very important point under the banker customer relationship. Very, very important, duty of secrecy. One of the most important, I would say the most important duty cast upon the bankers under the banker customer relationship. That is duty of secrecy. We call it duty of secrecy. What is duty of secrecy? Duty of secrecy means the banker should not divulge information of the bank customer without his consent or without his consent to any third party. The banker should not divulge any information of the customer to any third party without the consent of the customer. That is, in simple, the duty of secrecy. Important thing is, this is not limited only to the account details. This, you remember, when we say the bank cannot divulge information of the customer, it doesn't mean that the bank, that a duty is limited only to the details of the account. It is not the case. The banker should not divulge any information, including account details. So therefore, you remember, it is not limited to the account details, but also all other facts arisen out of the banker-customer relationship. So if any information, any fact, any data came to the knowledge of the banker under the banker-customer relationship, is secured by duty of secrecy. In other words, any information, any data, anything, any data of the customer came to the knowledge of the banker under the banker-customer relationship, the bank should not divulge that information or that data, that fact to any third party without the consent of the customer. So remember that then this is a substantial principle of banking law. This is a paramount principle of banking law. This has been recognized in the Banking Act, and also the bankers are bound by the Banking Act. Now remember, this is not just banking law, general banking law. This duty of secrecy has been recognized under the Banking Act also. So therefore, the bankers are bound by the Banking Act, and therefore, if you breach this, that the bankers can be punished under the law. Section 77 of the Banking Act. Section 77 of the Banking Act says every banker has to sign a declaration of secrecy. So the bankers, you have signed the declaration of secrecy, knowing or without knowing. The declaration is signed. The declaration says that you are bound to obey the duty of secrecy, and you are not going to divulge any information of the customer to any third party without the consent of the customer. So that section 77. Section 79 of the Banking Act says divulge of information or breach of duty of secrecy is an offense. Breach of duty of secrecy or divulge of information of customers without the customer's consent is an offense. It is not just a civil offense, it is a criminal offense. That you have to remember, all bankers, right? You must remember this. It is not a civil offense, it is a criminal offense. Criminal offense means that you can sue before a criminal court house, and you can be fined and also put into jail. So as per section 79, the punishment is fine of 1 million and imprisonment for 3 years. So if it is a criminal offense, if you breach the duty of secrecy, you can be subject to fine of 1 million and also can be put into jail for 3 years. So therefore, remember, it's a very dangerous if you breach duty of secrecy. These sections that you have to remember: section 77, declaration of secrecy; section 79, that is the punishment for the breach of duty of secrecy. Those sections of Banking Act that you have to remember. Now, when it comes to duty of secrecy, this case is very important case with regard to the duty of secrecy. When we discuss the facts of the case, that you will really understand what actually duty of secrecy means. This case is called Tonier case, or Tonier versus National Provincial Bank. Right? You can't write an answer to a duty of secrecy question without discussing this case, right? So this is the actually the base of the duty of secrecy in banking law. Tonier case. What happened in this matter? Tonier, he was a customer of this bank. He was a customer of National Provincial Bank. He had a current account with the bank. His account was overdrawn and he defaulted the repayment. So he had an account, current account, he overdrawn the account, he didn't pay on time, so he is in default. He was employed as a salesman in a company. So he worked in a company as a salesman, and this company also had an account, current account, in the same bank, in the same branch. So Tonier had an account, current account, and this company, his company, also had a current account in the same bank, same branch. Tonier's account was overdrawn, and bank manager always asked him to settle the OD, but he didn't adhere, he didn't pay. So the manager was very upset, very angry with Mr. Tonia. One day, what happened? The bank received a check issued by the company where Mr. Tonia works. The company has issued the check in favor of Mr. Tonia. Mr. Tonia is the beneficiary of the check, or the drawee of the check, sorry, rather payee of the check. The company has issued the check in favor of Mr. Tonia. Mr. Tonia has endorsed the check to a third party. So that third party presented the check for the payment. This third party is a gambling service provider. The person, the owner of the check, true owner of the check, or holder of the check is the person who presented the check is a gambling service provider. Now, when the check is presented, that was paid from the company account to this third party. However, the manager got upset now, because now you see, now when you consider the check, the payee of the check is Mr. Tonia. If he comes and if he deposit the check to his account, from the money that the bank received from the check, honoring the check, the bank manager would have easily set off against the overdraft facility of Mr. Tonia. However, Mr. Tonia, without depositing the check to this account, has endorsed the check to a third party. Now the money goes to a third party. Bank has no right to set off that money against Mr. Tonia's account. So the bank manager got upset, and the bank manager, what he did, he contacted the company and informed the directors of the company about this incident. And he told the company directors that Mr. Tonia is having an account with the bank, current account, and he has overdrawn the account. He has defaulted the payment. And not only that, the bank manager further said that Mr. Tonia is engaged in gambling. That's why he has given this check to a gambling service provider. So likewise, he gave all the information about Tonia's account and his other information to the directors of the company. This Tonia, he worked under contract basis. So what happened at the end of the contract period? The company terminated his service. His employment was terminated because the information provided by the bank manager. So thereafter, Mr. Tonia lost the job, and afterwards he got to know that he lost the job because the bank manager gave his information to the directors of the company. So he sued the bank. He filed action against the bank on breach of duty of secrecy and asked for damages. The court, what happened in the court held the case in favor of Mr. Tonia and ordered damages, ordered the bank to pay damages to Mr. Tonia on breach of duty of secrecy. So therefore, it is very clear now, under any circumstances, the bank officers cannot divulge information to a third party without the consent of the customer. When we say the information is not limited to the account details. Any information that comes to the knowledge of the banker as a result of banker-customer relationship is covered under the duty of secrecy. So, anyone has any questions up to now, you can ask. Do you have any questions? Okay, if you don't have questions, then I'll go to the Next one. Okay, when we say the bank should not divulge any information to any third party under the duty of secrecy, the duty of secrecy is not an absolute duty. Absolute duty means that under any circumstances the bank cannot divulge information. It is not the case. In certain situation, in certain uh, under certain conditions, the bank can divulge information. Bank can divulge information to third party. So what are those circumstances? Under what conditions that the bank can divulge information? So one is, number one, with the consent of the customer, that we know. If customer gives the consent, the bank can divulge any information. Number two, the disclosure, when the disclosure is compelled by law. That means if you have a court order requesting information of the customer, or a request under customs ordinance. If customs departments said an order requesting information of the customer, or a request under Bribery Commission Act, or request under Prevention of Terrorism Act, or any request under Inland Revenue Act. But so likewise, the law enforcement authorities can give a direction, can give an order to the bank requesting information of the customers. In a situation like that, bank is obliged to provide that information. So therefore, the providing information to the law enforcement authority as per the order is not a breach of duty of secrecy. Number three, when the banker owes a duty to disclose to the public. This is very interesting. Number three, when a banker owes a duty to disclose to the public. So bank has no consent from the customer, but there's no court order or any order from the law enforcement authority. But bank officers think that they have an obligation or duty to inform the public about the customer's account or customer's details. What is that? Under what situation bank can divulge that information to the public? Not to a particular person, to the public in general. So we say a situation like this. We say we take an example like this. We say there's a finance company. That finance company has taken deposits from the customers. Deposits from the customers. So the company is now under litigation, or they are going to wind up their business. Where they have defaulted the depositors. They are not paying depositors. So now there is a tension. There is a tension build up in the society. Now the depositors has gone to courts and filed action, and they are now searching for the assets of the company. This company has an account in your bank. They are maintaining an account, and there's a huge sum of money in the account. But no one knows. No public doesn't know that the money is in this account. In a situation like that, the bank has a duty to inform the public. Inform the public that you are holding the funds of this company for the company. So the public or depositors will go to courts and get a order. Then according to order, that we can act on the properties of the company. So that is number three. Number four, when the disclosure is required in the interest of the bank. That is number four. it is not, there's no consent from the customer, there's no bar, law, legal bar or court order from the to divulge information, and it is not a public interest situation, but the bank has a duty, bank has a right to disclose the information of the customer for the interest of the bank. So what is that situation? Now we think a situation like this. We say that there is a well-known drug dealer, right? That person is maintaining account with you. You don't know that this is the drug dealer because he's maintaining the account under his real name, but this dealer is known in the public as some other name. We say Madhush, right? So his name is Madhush, and he's a drug dealer, but he's maintaining an account with your bank in a different name. Now, recently we say that person has been captured by the police, and now police investigations are going on. Police investigations are going on. They are now seizing the properties of this drug dealer. Now, you have his account in the bank. There is no court order from the court or the police requesting information. However, since that money in this account is illegal money, it is always, the bank has a duty to inform the law enforcement authority for the interest of the bank. Otherwise, what will happen if you don't inform the authorities, if you keep silent, so that they can find fault with you, with the bank. So therefore, under that circumstances, the bank can divulge that information to the law enforcement authority, not to anybody, not to a third party, not somebody who is not relevant. You can divulge that information to the law enforcement authority, then the law enforcement authority will take necessary action with regard to that money in the account. So likewise, under these four circumstances, under the common banking law, the banker can divulge the information of the customer to a third party without the consent of the customer. So that is under the common banking law. Next, we are going to discuss about the Banking Act. Under the Banking Act, also there are provisions that a bank can divulge information. Now you see, under the common law, there are four situations that we can divulge information, common banking law. And under the Banking Act, Section 77, also there is a provision, there are provisions that we can divulge information. So 77 says a declaration of secrecy, director, manager, officer, employee of the bank should observe strictly in respect of the all transaction of the bank customer, except, that means under these situations that bank can divulge information. Number one, when required to do so by the court of law or by the person whom such matter relates. When the request comes from court of law, that means that court order comes to you, to the bank, then the bank can divulge that information. Number two, by the person to whom such matter relates. when the request come from the person, the matter is related. The person the matter relate means the account holder. If the request come from the account holder, requesting information, requesting to divulge information to a third party, so the bank can divulge that information to a third party. That because the consent of the customer has been given. Number two, in the performance of the duties. As a banker, when you are performing your duties, you provide information to the authorities. So for example, as bankers, banks are under supervision and regulated by central bank. So therefore, time to time, the central bank request information from the banks. They request customers information also. The transaction, suspicious transaction you have to report. Likewise, you have to provide reports to the central bank. Now, when you are providing this information, you don't get the consent of the customer. You can't get the customer's consent. The question is, when you provide information to the central bank or any other authority, while you are performing your duties as a banker, whether it is amount to a breach of duty of secrecy. Now, as per the section 77 of the Banking Act, says it is not a breach of duty of secrecy if you provide the information to the relevant authority while performing your duty as a bank. So this is not under this point is not mentioned under the common banking law. This point is mentioned under section 77 of the Banking Act. So remember the situations that you can divulge information under common banking law and the circumstances that you can divulge information to a third party under the Banking Act are different, right? Some are similar, some are different, right? Under the Banking Act, there is a provision that you can divulge information while you are performing your duty as a bank. Number three, in order to comply with any of the provisions of the of Banking Act or any other law. So number third one is the banker can divulge information to a third party without the consent of the customer as per any provisions of the Banking Act or any other order, any other law. So that means if a request comes from Inland Revenue Department under the Inland Revenue Department Act, so that bank has to abide by. And if a provision, if a direction comes from the Custom General under the Customs Ordinance, again the bank is obliged to provide that information. Likewise, the bank has to obey by the law, Banking Act or any other law. So therefore, there is a provision that you can divulge information. So you have to remember these two, these common law situations, common law situations where you can divulge information, and under the Banking Act, what are the provisions or what are the situations that you can divulge information without the consent of the customer. So with that, we finish the banker's duty of secrecy. Very important topic under the banker-customer relationship that you have to study thoroughly in this section, duty of secrecy section, for your exam and also for your knowledge, work knowledge, that you have to familiar with this area. Right, we'll go to the next one then. The other duty of the banker, duty of care. Bank has a duty of care towards their customers. Under the banker-customer relationship, When a bank allows a customer to open an account, the customer has the banker has a duty and the customer has a right. Banker has a right, duty of care. Duty of care owed by the banks to the customer. You know, the banker, while doing banking, the bank act as the paying bank in certain situations, and also sometimes the collecting bank. Paying bank means the bank who pays the check. Paying bank has a duty of care to protect the customer from the fraud of agents such as directors and partners in issuing checks and other payments orders. This is very important when you are paying checks as a paying bank. Always remember, when you are paying, you have a duty. You have a duty towards the customer, account holder. You have a duty towards the account holder. You have a duty of care. You have to protect the rights of the account holder. You have a duty to protect the customer, the account holder, from frauds. So, for example, agent of the customer, account holder can commit a fraud, fraudulently can take money of the customer's account. Agent or director of a company can take money from the company account. So bank has a duty to prevent this type of frauds. Now, for example, we say a company director who is the authorized signatory of the company issue a check signed by himself, the payee also the director. The check is issued from the company account, right? Authorized signatory is the same director, payee of the check also the same director, right? He signed and issued a check to pay money to himself from the company account. So when you get the check like that, you have to be very careful, because it could be a fraud. If it is a fraud, that you remember that you have a duty to safeguard the right of the account holder. Who is the account holder? The account holder is not the director. Account holder is the company. So you have to protect, as a banker, you have to protect the account holder's right. That means the company's right. So therefore, it is very important. The bank has a duty to prevent frauds of agents and directors, and you have to protect the right of the customer. Number two, bank owes duty of care in giving financial and investment advices. Now remember, under the banker-customer relationship, sometimes the banks gives instructions, or rather the financial advices to their customers, right? Banks give, bank officers, they give advices. It could be a financial advisor, it could be an investment advice, or any other banking service advice. So when you are giving advice to your customer, remember, you give that advice as a banker. So banker's advice. And also that you have to remember, the customer could follow your instruction or your advice. What will happen if you give a wrong advice or a negligence advice, and customer follow the advice and he or she made a loss because of the wrong advice that you provided? What is the situation? So remember, when you have when you are providing when you're providing advices, financial or investment advices or any other advice, in that case, you have a duty of care. You have a duty of reasonable care. So that means that you have to provide a correct advice. You should know the subject, and you have to provide the advice without negligence, with due diligence. So then you are protected. Or otherwise, if you have given an advice without knowing the subject, that means obviously that you are not supposed to give such an advice. Or if you give an advice without proper attention, without studying properly, so that is a negligence advice. So we have come across a lot of situations that the bank officers, they have advised negligently, and also sometimes I would say without proper knowledge. Sometimes some bank officers give legal advices also to their customers. They are not conversant with law, but they give legal advices. So if customer follow the legal advice and lost money, then the customer can sue the bank. So therefore, remember that the banks owes a duty duty of care when you are giving financial advices, investment, and also when you are providing bankers' opinion. Then third one, the banks owes a duty of care in explaining the effect of the security documents. This is another very important point that I want to stress as at this point, because this is also one of the common fault that I see from the bank officers side. Now see the duty. What is the duty? Duty of care in explaining the effect of the security documents. What are the security documents we take from the customers? We take personal guarantees. We take loan agreements when we are granting loans, or we take overdraft agreements, current accounts, credit card agreements, we some mortgage bonds, right? We ask customers to sign. So you are supposed to explain the security documents to the customer if he can't read and understand, right? Sometimes the customers say explain. Sometimes they don't say so, but you have a duty to explain the effect of the security documents. So I have seen this, I have observed this. The bank officers, they don't properly explain the document because they don't know what is the document. They have no understanding. They have not read the document, so they don't know the effect of the document. So therefore, they can't basically explain the documents to the customer because you don't know. For example, if I ask the question from the bank, from the audience, what is the difference between the indemnity and the personal guarantee? I'm sure none of you knows that, right? So, but you are supposed to explain that to the customer. The customer comes and asks, what is the difference between the guarantee, personal guarantee, and the indemnity? Can I give a personal guarantee or indemnity? What is the best thing to do from my side? So you are supposed to explain. You are supposed to explain the effect of the document. What is the effect? What is the legal effect of the indemnity? What is the legal effect of the personal guarantee? what is the effect of the mortgage bond. Likewise, you are supposed to explain to the customer. So if you can't explain, don't explain, right? Don't try to give a wrong interpretation or wrong explanation to the customers, because most of the time I have seen that the officers, they give wrong interpretation and wrong explanation for the documents. So if you don't know that, you refer to a person who knows about it. So then, however, remember, there is a duty cast upon the bankers to explain the documents, security documents, before you get the signature of the customer to the document. So that is number 3. Right. Any questions up to now? Any questions up to now? Okay, so then I'll go to the next one, since there are no questions from the audience. Right. Banker's duty as a trustee. Now, banks, I told you, under the banker-customer relationship, the fundamental relationship is the contractual relationship. It's a contract. But I said, time to time, it can have a different type of a relationship, a different nature of relationship. Bank as a trustee has a duty. Bank is a trustee with regard to the safe custody of deposits and goods. Now customers comes and they deposit their valuables in the safety lockers. Or sometimes they comes and they own their gold articles. So they keep the custody of those gold articles and valuables in the bank. So what is the position of the bank? The bank is holding this property of the customer, valuables of the customer, as a trustee. So therefore, if you are entrusted as a trustee, you have a great obligation to protect the goods of the customer, valuables of the customer, for him. So if you lose the articles, goods of the customer, as a trustee, you are liable. You are liable to pay the damages to the customer. The bank has to hold the deposits and goods of the customer on behalf of the customer. The bank has to act according to the instruction or the mandate of the customer. The other important thing is, when a customer gets a service from the bank and keep his valuables, goods with the bank's custody, the bank keep the goods or the valuables of the custody as a trustee, and the bank has to follow the instructions of the customer. So that is very important. The bank can be held liable for theft, misappropriation by the employees during the banking business. So we say the customer came and customer deposited, customer kept his valuables in the safe custody. The bank staff misappropriated the goods, and someone opened the safety locker and took the valuable jewelries of the customer. So that's a misappropriation, or it's a theft. So in a situation like that, the bank is liable to pay the customer damages and the value of the goods. So therefore, as a banker, the banker has a duty to protect the customer's goods, because you are keeping those goods as a trustee on behalf of the customer. So then, bank's duty as an agent. So this is another form of the banker-customer relationship, principal and agent relationship. Under this banker-customer relationship, the banker and the customer sometimes act as the agent and the principal. Who is the principal? Principal is the customer. Agent is the bank. So bank represent the customer as an agent. So bank is an agent of the customer for remittance, collections of checks and payments on behalf of the customer. So if you are maintaining a current account, if the bank is maintaining a current account on behalf of the customer is the principal, is the account holder, he is the principal. He gives instructions to the agent. The agent is the bank. So the bank has to obey the instructions of the customer, and bank collect, pay checks and remits checks, collections on behalf of the customer. So it is a duty as an agent. The bank, as the agent of the customer, has a duty to act for the benefit of the principal, that is the customer. So always, if you are entrusted as the agent by your principal, that is the customer, the bank has a duty to act on behalf of the customer for the benefit of the customer. So you can't act as an agent and get the benefit to the bank. It has to be you have to act for the benefit of the customer when you are acting as the agent of the customer. So those are the the duties and responsibilities of the banker under the banker-customer relationship. So if you have any questions up to now, you can ask. If you have any questions from the banker's duty and duties and rights and duties. Any questions? Okay, if you don't have questions, then I'll go to the next one. That is customers' rights and duties. Okay, from the customer side, I don't think that we have enough time today to cover this part, customers' rights and duties. So what I will do, I will wind up now. It's then we'll start from here, customers' rights and duties, on the next Sunday, 1:30. So we'll continue from there onwards. But if you have any questions from what we learned today, you can ask questions now. We'll have 10 minutes for question, answer and question session. Do you have any questions? No one has question. Kasun, Achini, Madhushani, no one has questions? Okay, in that case, we'll wind up now today's lesson. So we'll start on the next week. We'll start with customers' rights and duties. Thank you very much for your participation. And next time, I hope that you will ask more questions and actively participate for the lesson. Thank you again. We'll see you on next week.